Welcome to Investago TV's weekly review, your essential source for global economic updates, keeping you informed on the latest market trends and financial insights every single week. Buckle up! Last week, the BRICS summit in Johannesburg saw a proposal for a new gold-backed trade settlement currency. This could mark a significant step away from fiat currencies towards those backed by gold. The reason being, nations at the BRICS summit are not hindered by expensive welfare commitments and can link their currency values to gold. This is a stark contrast to Keynesian views, where the idea of sound money is overlooked. Today's financial crisis in America and Europe, along with flaws in the euro system, paved the way for gold-backed currencies. The proposal is seen as a strategic move in the ongoing economic war between Russia, China, and the US. If realized, it could significantly undermine the dollar, leading to central banks in the BRICS nations selling off their dollar reserves to acquire physical gold. Inflation talk has flooded financial news lately, with some even suggesting a shift towards deflation. However, the reality on the ground, especially in terms of food prices, tells a different story. Three key factors drive food inflation: low unemployment, supply issues due to a Russian-Ukrainian war, and China becoming a net food importer. Despite some relief from African swine flu and efforts to reduce reliance on the US, China remains a significant market for US corn exports. Furthermore, with India restricting rice exports, rice prices are also on the rise. So, the prospect of deflation amidst increasing food prices seems highly unrealistic. Bank of America's CEO, Brian Moynihan, has recently revised his predictions of a mild recession, attributing his optimism to the resilience of the American consumer. Moynihan highlighted the strength of a US economy, which he believes is driven by people working, earning, and spending. His research team predicts a light recession in 2024 first half, which will not significantly impact the economy. Backing his optimism are the company's strong second quarter results, showing a 19% rise in the net income to $7.4 billion and revenue growth by 11% to $25.2 billion. With these positive results, Bank of America stocks increased by 4.1%. China's economic growth is slowing down more than expected, causing Wall Street firms like JP Morgan and Morgan Stanley to cut their GDP growth predictions for the country to 5%, down to 5.7% and 5.5% respectively. One of the main contributing factors to this decline is the ongoing struggle of China's property market, with property investment having fallen by 7.9% in the first half of 2023. The government is expected to hold back on the economic stimulus necessary to boost the economy, as they strive to balance economic transformation with growth stabilization. Even though China's central bank reduced a short-term lending rate recently, the overall government response has been seen as hesitant. China's GDP grew 6.3% year-over-year in the second quarter, less than anticipated 7.3%, while youth unemployment is above 21% and predicted to increase further. That's a wrap for today, and I'll catch you next week. Don't forget to follow us on our social media channels to stay updated. Wishing you continued success on your journey.